Welcome back, investors, to Ticker Time News. I'm Adam, and Caterpillar, ticker symbol CAT, generated solid double-digit sales growth in each of its core segments in Q4 21, leading to a comfortable beat on both the top and bottom lines. The company's strong results fortify the notion that construction activity around the world remains quite healthy, providing a bullish data point for the global economy. In addition to robust demand for heavy construction equipment, favorable dealer inventory levels and price hikes helped to drive revenue higher by 23%. Over the past few quarters, revenue growth hasn't been an issue at all for CAT. After the construction industry segment, about 40% of Q4 revenue registered growth of 30% in Q3 21. The division followed that up with an impressive performance with growth of 27% this quarter. Ongoing strength in the North American residential construction market is the key catalyst for this business, bolstered by rising commodity and raw material prices. The mining heavy resource industry segment posted sales growth of 32% in Q3 and 27% in Q4. Rounding it out, energy and transportation was the lagger, and I'll put that in air quotes, of the group, with revenue up 19% to $5.7 billion. However, plenty of companies would be envious of high teens growth rates, right? CAT expects this booming demand environment to continue too, forecasting Q1 22 sales that exceed year-ago levels. Unfortunately for CAT, the story does not end there, as it has other issues to contend with, such as margins continue to be squeezed by a combination of higher freight costs, rising material costs, and production inefficiencies related to supply chain constraints. Those headwinds caused operating margin to contract by 600 basis points year over year, bringing it down to 11.7%. Even more problematic is that CAT expects those cost pressures to persist into next quarter, causing adjusted operating profit margin to decline on a quarter by quarter basis. On the positive side, additional pricing actions should offset manufacturing cost increases in fiscal year 22, leading to stronger margins later in the year. China is still a sluggish market, and escalating risks and volatility in the real estate market there, especially on the commercial side. That poses a threat to CAT's construction business. Rising interest rates and tighter monetary policy should slow capital investments into larger scale projects, dampening demand for heavy machinery. The main takeaway is that it's a mixed picture for CAT, as its shrinking margins cloud over a healthy demand environment. Although the company believes that supply chain issues will ease in Q1 22, investors don't seem entirely sold on the optimistic projection. Well, that's what I think about CAT's earnings right now, but I want to hear from you. What do you think of CAT's earnings and their belief that supply chain constraints will ease around March? And remember, your comments make these videos so much better. Thank you so very much for watching, and I'll see you in the next video.